Hi guys, Bitcoin just crashed under $104,000 last Friday and the fear is spreading. But here's the crazy part, big banks still think it is going to $200,000 by the end of the year. Analysts at Standard Chartered and JP Morgan still predict a longer Bitcoin bull run and set a target between $165,000 and $200,000 for the end of 2025. If you are confused whether to follow the predictions of the analysts or to brace for a longer correction in Bitcoin, let's break down the price action since Bitcoin's all-time high on October 6th. This is Ekta Mourya for FXStreet and welcome to another Bitcoin weekly forecast. Bitcoin touched a low of $104,000 on October 10. This week started with a slight recovery from the crash, with traders remaining cautious. We discussed three key catalysts to dive deeper into the price action: institutional demand for Bitcoin, technical indicators, and the formation of an Elliot Wave pattern on the Bitcoin daily price chart. Now, on the institutional front, US-based spot Bitcoin ETFs recorded net outflows 4 days out of 5 last week. Historical data from Soso Value shows that whenever there is a higher number of net outflow days compared to inflows, that corresponds to consolidation in Bitcoin price. And typically, a Bitcoin flash crash is followed by higher net inflows in the weeks after. This could signal that we are headed towards a period of institutional buying or whales buying the dip. On the technical front, if we look at the Bitcoin daily chart, it looks like we have completed the 5 Elliot waves and are ready for a correction. The first drop is marked by the October 17 low of 103,500 level. If the Elliot wave theory is correct and we have a further correction in Bitcoin, then the range between the $70,000 and $80,000 becomes relevant for traders. While the possibility of a return to the all-time high above the $126,000 level cannot be entirely eliminated at this point, the completion of the 5 waves of the Elliot wave theory serves as a signal for sideline buyers waiting to deploy more capital into Bitcoin and add more BTC to their portfolios. If we take a look at the weekly chart, we also see a bearish outlook, with the $98,000 and the $74,400 level acting as key support for Bitcoin price. The MACD indicator shows that there is a negative underlying momentum in Bitcoin price on the weekly time frame. Now, these are important signs that support the bearish thesis for Bitcoin. The bullish narrative is supported by institutions and whales that are buying the dip. Bitcoin is trading in turbulent waters, with the market still undecided whether we are going through a new bear cycle or the bulls still have legs on their rally. ETF flows tell us that institutional whales could try to buy the dip soon, but technically the charts point towards a bearish thesis. The key levels to watch for a decision at this point are the $100,000 and the $112,000 level. A daily candlestick close under support at $100,000 could signal a period of extended correction in Bitcoin price, while a close above the $112,000 level could give traders the confidence that they need to believe that Bitcoin could retest its all-time high in the coming weeks. Now, if you like this video, then share it with your trader buddies, like and subscribe to FX Street. See you next week with more insights on Bitcoin price.